Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on July 11th. So nothing's really changed in the past couple of weeks since our last video. In terms of the top-down evidence, we're still in intermediate-term uptrends. Broad market is healthy, actually getting healthier with some of the rotation we've seen. And just a lot of big picture stuff, like the strength seen since the low. It lines up with other major bottoms, 1975, 82, we've talked about this before. So that things that have led to another 12 or, 1 or 2 years of advances. So to me, from that perspective, everything still looks good. Market timing indicators are positive. And we're probably 3 months into what could be a, longer advance here, whether it's 9 months or 12 months or 15 months. We'll see how it plays out, but relatively early stage. I would say near term, though, there have been some potholes. Number one, with growth stocks and some rotation. And when it started in late June, these were coming off of big runs, no problem. Now that we've seen like 3 or 4 distribution days and sort of the complex, we're seeing more and more names approach key support, even as the major indexes are kind of hanging up there. And as we're going to take a look at in a minute, when you go back and look at some of these past bottoms, whether it's a bear market or sort of a crash, so to speak, like we had, usually 3 months or so is a logical place for the market to start to digest, where you do start to get, more than a 1 or 2 day pullback. You might pull back 3 or 4% in the indexes and so on and so forth. Okay, no predictions, but that's why we've been pulling in our horns a little bit. We're about 1/3 cash in Cabot Growth Investors model portfolio. The good news is I think if we do pull back or rest or whatever you want to call it, I do think some established leaders that are early stage will pull into support, and most should hold support and provide some higher odds entry points. So that's really what I'm sort of looking forward to. But in the meantime, I've sort of took my foot off the accelerator a little bit, selling a laggard or two, taking a partial profit, and holding the cash on the sideline to see how things play out in the days ahead. Okay, let's hop into the charts as always. I'm using a product called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So this is the NASDAQ. And so first things first, I just want to go through, we're still just top-down evidence. Again, if you're just investing in, blue chips or the major indexes or whatever, plenty of daylight, number one. Number two, clearly in an uptrend above the moving averages. That's the NASDAQ. Here's the S&P. Other stuff, not as strong, but still positive. This is the mid caps. This long term is the 200-day line, but just for the intermediate term perspective, still clearly above the 50-day line, so on and so forth. Okay, small caps and all that. So intermediate term trend clearly up, longer term trend, at least for the big cap indexes, clearly up as well. So all that's to the good, okay? We have started to see more and more, like I said, growth. You call it rotation, selling, whatever you want to say, but this is the IBIT 50 index, which is not a perfect, I'm not saying this represents like all the growth stocks, but it's a measure. And you're going to see how, forget about relative to where it has been in the past here, but just even recently, it really just hasn't been able to get going since that early June when we started to consolidate there. And not to get too in the weeds, but June 25th, I think it was, July 1st, and then yesterday, so this would be Thursday, July 10th, have been like 3, there's been some other wobbles in there, but 3 at least distribution days for the growth complex. Most of those days, the money rotated into small caps and things like that. But we're just starting to see that. What I've been writing is, as long as the leading stocks pull back and the rest of the market kind of broadens out, that's all to the good. The problem is when the leading stocks start to kind of really crack and stall out for week after week after week, and then people say, well, the financials are going to lead us. That usually doesn't work. Sometimes it's possible, but usually we've seen that a few times in the past couple of years where the leaders start to bend. People say, well, copper stocks look good now. And then those kind of follow the trend down. We're not there yet. To this point, there's been very little abnormal action, abnormal selling in growth stocks, but I do have my antenna up short term, okay? Another reason I have the antenna up, just to go back to the NASDAQ, and this is just going to be a very, this isn't an in-depth study or anything, okay? But just go back to some of these bottoms that have been, these are actually a similar thing where they all advanced 20 or 25% within 3 months off the low, okay? This is 1998. In the NASDAQ. And if you just kind of count forward 3 months, okay, from the low. So this was early October. So now you're looking at early January, which is in here. The market did go higher, but then it kind of kicked off what ended up being really months of consolidation. But even shorter term, forget about, I don't want to play it out too far, but you did kind of get a pullback to the 50-day line here, not too far after that, okay? 2003, after the Iraq War 2.0 and that the internet bubble popping, okay? The bottom was in early March. Actually, let me blow this chart out a little bit. So the bottom was in early March of 2003. Okay, here we are in early June, which is right here. Okay, and you started to kind of have one consolidation, you end up having another one. If you look at like the S&P 500, it's probably a little bit clearer. Here you are in early June. It kind of starts a consolidation phase for most of the market. Okay, 2009, same thing. It was kind of an early to mid March bottom at the 2009 low. And so you look 3 months forward, mid-June, here you go. Right here, you end up pulling back. It's not magic. I mean, even 2020, after the COVID crash, okay, so here we are. It is interesting how March is kind of a low point for so many things. This year it was early April, but either way. This was late March, so you kind of look at late June, which is like right here, but this was kind of your first consolidation in that 3-month time frame. Does that mean like, oh, now I'm going to go sell 5 stocks because I just went and looked at 4 historical charts that said the market can hesitate after 3 months? No, it's just kind of a signpost there that says, hey, a lot of people who were super scared back here and who were doubtful back here, they feel pretty good up here. And usually the market tends to kind of keep people off balance. So it wouldn't surprise me if we were, whether it's sideways or maybe the S&P does this, but the NASDAQ comes down, sometime in this time frame. I'm all for being wrong. If the market wants to go higher, I'm not going to argue with it. It's just something to keep in the back of your mind, okay, as we go forward. And then just looking at sort of some of the primary stuff here, you are starting to see that ServiceNow hasn't been a big leader or anything like that. It's not. But, you are starting to see some stocks now that were, I don't want to call it a laggard either. I mean, we had it in top 10 once or twice, but, it's starting to come off, okay? Axon Enterprise, AXON. Is it broken big picture? No. But you're starting to see it come off, kind of break the 50-day line a little bit. Seems to be tailing as I record this today. CoreWeave, which we've talked about, is not, same thing. It's not broken. It's a little bit long now. It's 30% down from its highs, which is not abnormal given the run, but might mean that the stock is going to need some time here going forward. So you're starting to see more, what I would say, bending, not breaking, but bending. So anyway, long story short is big picture. I think it's a bull market. I think we go a lot higher. And I think a lot of these stocks are going to be a lot higher down the road. But, in the short to intermediate term, especially with earnings season going, I do think, let's see what happens here the next week or two. Like I said, I'd love to be wrong. And I'm not predicting we're going to go down, but it just seems like the market is kind of in that phase. And we're starting to see some selling in some of the leading stocks where maybe we take a breather. Let's see how it goes. Okay. In terms of an action plan, like I said in the outset, I think that if we do pull back, the good news is there's established leaders. Some might crack, of course, but there's established leaders that should come down to 50-day lines and things like that, obvious support, and generally hold them. So I think pulling back into those, it could be viable, number one. Number two, there's still some things that are very tight here for 5, 6, 7 weeks. If they can break out, whether it's on earnings or something else, that would be good. And then, of course, we have the rotation, too. Those are kind of the 3 buckets I'm looking at. So in terms of stocks that are established leaders and could pull back, this is Oracle. I'm kind of fascinated by it just because when you get some of these mega cap names that haven't been super hot for 2 years, and they really have the story and the accelerating growth, and they really show outstanding accumulation, they can just be this magnet for institutional money. And that kind of seems what Oracle's doing. It's extended here, but can it pull back toward, say, the top of its prior basis 200? Can it shake out towards its moving averages? That's one of them. Seagate Technology. I mean, this has been unbelievable with the, this blue buying wave. I mean, it's been up 100 weeks in a row. Obviously, I'm exaggerating, but looks really good. Clearly out to new highs. They do have earnings here next week, so we'll see what happens. But this is one where maybe can it get a 3-week pullback as the 50-day line starts to catch up? Just one to keep an eye on. Zscaler, cybersecurity has turned a little bit more mixed, so we'll see how it goes. But Zscaler, again, when you just look at the weekly chart, it was smoke up a chimney. It really broke out to new multi-year high, or at least multi-month highs very, very quickly after the market's low. Had a bunch of weeks up in a row, great reaction to earnings, 2 weeks up in a row, 2 weeks of big volume. And now it's been stalling out very tight and now pulling back and shaking down toward the 50-day line. So, I'm not going to advise anything like saying, oh, you buy it here and have a stop here. That's more in the paid publications and stuff. But either way, this still looks proper. It's bending. So you want to see how it goes, but still looks proper overall. And the first test of the 50-day line, quote, should be okay. Cloudflare, NET. This is one of those ones that was just hard to handle, right? It was straight down 50%, I think, and then straight back up. But you can kind of see how it's been grinding higher. They hit it once here. I think there was a convertible offering maybe. They hit it here with growth stocks. They hit it yesterday on Thursday with growth stocks, I should say. But still just hanging around the 25-day line. Can it hang around a little bit more and the moving averages catch up sort of thing? Something to keep an eye on. Celestica, CLS. I wouldn't say this has been the biggest leader, but you can see clearly a very nice, very persistent advance basically. And sometimes you get what's called persistent pullbacks. You get a stock that's really just kind of going up steadily, and you almost have a knockout move. I'm not predicting that's going to happen, but maybe you knockout move to the 25-day line or something like that. So anyway, there's a bunch of stocks that are clearly in uptrends, clearly under accumulation, have the numbers, have the sales, have the earnings, have kind of been quote-unquote blessed by the market, so to speak. And usually the first pullback there, just like with the overall market, should prove viable. Why? Because it's a bullish trend, okay? Obviously, you got to use your stops and loss limits in case something goes wrong, but that's just something to keep an eye on. Amerisports, in terms of potential breakouts, these are names I've kind of mentioned before, but just continues to be very, very tight after basically doubling off the low in a few weeks and having a massive, you can see this huge volume clue after earnings. Usually that leads to good things. We'll see what happens. But just remaining very tight in here. Can it finally get going on the upside? Life 360, LIF. This one's a little thinner, which means it's thinner. It's going to move around and we'll see what happens. But again, just kind of a very nice tight multi-week range as the 50-day line is caught up and really hasn't, it's wobbled here with the growth stocks, but it really hasn't, just like AS, it hasn't gone anywhere. It's still in this relatively tight range, okay? And then here's Bitcoin. I'm mentioning this because it is kind of breaking out. I will say this is on everybody's lips. This is IBIT, but you can pick there's a few different ETFs for it. The weekly chart is very proper. I tweeted about this. It had the tightness at the lows, the 40-week support. It had a few weeks up in a row. It had 3 weeks tight in the handle, or whatever you want to call this, the base on the base. Now it's kind of breaking out on the upside. So it looks like it wants to go higher. Could the market kind of give it one more shake? Of course, if the market pulls in. But, I always just kind of go with what's in front of me, and Bitcoin looks pretty good, okay? And then in terms of, rotation, we are starting to see more just areas and names perk up. I'm not saying they're all breakouts or whatever, but yesterday was Delta Airlines. This might have been, I didn't check this. I forgot to check it, is really the answer. But anyway, the daily volume yesterday, week's not over yet, but it probably won't be as big as the crash. But the daily volume yesterday on earnings, they either raised guidance or reinstituted it, whatever it is, was very, very extreme. The stock kind of, you can see it's hitting, not huge, but hitting a 4-month high or something like that. UAL is another one that's a little bit, they still have earnings next week, so we'll see. But, trying to break out, trying to show some strength on the upside. Copper stocks, FCX. Of course, there's some tariff news in there too. But you can see it's been the dog's dinner. A lot of these commodity names have just been really nothing, and then they kind of crashed here in recent months. But it's been pretty persistent on the upside since the low. You can kind of see it's been this, and now it's kind of accelerating higher. I'm not sure if you chase it or what. Maybe you do, maybe you don't, but it's up to you. But you're starting to see some of the copper stuff work. And then, the cruise lines kind of are impressive. This is Royal Caribbean, I guess. These things have just been going for years, and it's cruise lines, but it's also not something that somebody, you don't just show up and have 5 cruise ships. I mean, it takes time to build and get in the business. So there's only a few players in the market, limited supply, good pricing, a lot of advance orders. And, maybe this was sort of a reset, for the whole market, including RCL in terms of the shakeout in the spring. And it's really come back. And you're going to see it had been coming back anyway, but you can see the nice breakout really since the rotation started in earnest into the broad market. Viking Holdings is another one, VIK, which I think maybe not quite as strong, but I think it looks pretty good. You can just see it's really been a nice wave of buying here. So, I don't want to say bad news, but just near term, it's kind of like, let's see what happens. Maybe I'm completely wrong, and this is the time when the market just, doesn't pull back more than 1 or 2% for the next 6 months, I'm all for it. I'm all for it. But I do think between not just the studies of the past, but between, seeing some of the rotation in some of the growth stocks, seeing some of these leaders bend a little bit, it's kind of like, okay, let's see what happens here short term as we roll into earnings season. That's my thought. But bigger picture, most of my focus, even though most of the video wasn't on it, but most of my focus is on the bigger picture, which really does remain bullish. Doesn't mean it has to work. There's no certainty in the markets. But when you look at, the panic selling, the whole setup for the first 6 months of the year, and some of the strength and unusual strength seen in May and June, it really does portend good things down the road. So maybe with your laggards, keep them on tight leashes. If you have something sticking straight up in the air, maybe take some partial profits, and maybe hold a little bit of cash for now. But overall, certainly you want to continue to keep your optimist hat on. Okay, that's all the time I have for today. We are kind of having a special offer at the end of this video at the final slide. So if you're interested in all, visit cabotwealth.com. There should be a link possibly in the comments too, but we have a special offer for new subscribers only for Cabot Growth Investor. It's a great time to get on board. It really is, as opposed to waiting another 9 months when all the news is good and there's no worries in the world. But I hope you can join us. But either way, that's all the time I have for today. Thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.